Welcome back to the Stay Broke Podcast. Today we're sitting down with Chris Webb, co-owner of Property Specific Realty. Chris has a background in property management and large-scale real estate investments, including over 100 million in student housing deals. Now he's helping buyers, sellers, and investors navigate the market with a more tailored approach and doing it as an independent brokerage, not tied to any national brands. Chris, welcome to the Stay Broke Podcast.
Thank you.
So I've had a struggle with real estate industry and realtors in general for the last few years. I attribute it to COVID, and maybe we can talk about this, but I've done a fair amount of real estate transactions, buying and selling, mostly residential, some commercial, and had a great relationship with a real estate firm locally. And that realtor left right about just after COVID happened, and we had to make a transition. The other realtors weren't clicking.
Yeah.
And it seems like after that, we'd try to bring in different realtors, and some would just flat out tell us they didn't want to sell our property because it was too difficult, or they would do the bare minimum if we brought them on. The percentages were going up, and it was all kind of crazy. So we've had this battle with trying to sell this house for 2 years now. It's been sitting vacant. And we tried selling it ourselves and had caught realtors stealing our signs, refusing to show the house to their customers, like all kinds of stuff. And then tried a couple other things, took it off the market till after the first of the year. And I met Andrea, one of the real estate agents that works for you, and at a networking event. And our office actually used to be above you whenever we were in downtown Wake Forest.
Okay.
So I had checked y'all out before, and I was like, oh, let's give it a shot. I've heard good things. And you guys had us under contract in 1 week. House sold in 4 weeks from the date we listed it. Completely done.
Yeah.
Absolutely amazing.
Good.
So restoring a little bit of my faith. So I thought we would share that, because I know I'm not the only one struggling with selling. This is a weird market.
Yeah.
People are trying to sell and they don't know who to call. Everybody's a realtor. Everybody's related to a realtor. Not all realtors are equal.
Right.
And that's what I want to dive into today. So thanks for coming in here. I appreciate it.
Absolutely.
Who are you? Where are you from?
Chris Webb. I'm one of the few that's A, from the state, B, from within probably an hour and a half radius of Raleigh. So Raleigh's just such a melting pot, which is great. But you have to go a little further north, whether that's Youngsville, Franklinton, or Zebulon, to really start to get some more people that are local to the area. So I grew up in Dunn, North Carolina, right off 95. After high school, went to undergrad at East Carolina, tried to get out of Dunn as quickly as I possibly could. Quickly realized how small of a town I came from. And I tell this story to people. My roommate was from Virginia Beach, and I legit thought he was a Yankee. I had no idea. It's just such a small town. I had 94 people in my graduating high school class. It's one of those areas, if you don't get out, you get stuck there, right? So East Carolina for undergrad, moved to Raleigh after that, and that's kind of what started the real estate industry for me, or the real estate profession for me. Started out doing property management, low-hanging fruit, low barrier to entry. One of the fewer real estate related positions where you actually get a paycheck. So started doing leasing apartments in these big apartment communities, kind of, rose up to a manager, regional manager, asset management, kind of, climbed up the corporate ladder there fairly quickly, learned a ton, and built a lot of good relationships. But decided, and we can go into this later, but decided at a certain point it was time for me to try something different, still within real estate, but to kind of pivot away from the heavy property management and start doing a little bit more brokerage. Went to grad school at Georgetown to get a master's in real estate development and finance. So I wanted to find a way to really start to implement that into what I do on a day-to-day basis. Figure out a way to leverage the relationships that I'd built over the years in the corporate world. And then, Property Specific was born, and a couple of passion projects have kind of developed outside of that as well. So excited to share it with you.
Awesome. Yeah. So how was it? I grew up in a small town too, about 100 people. We had a large graduating class. I think it was 100 people, maybe 101.
Yeah.
But there's not a lot of opportunity there, and like
Zero.
being able to see past that, to see a future is hard too. Did you have that experience?
I did. So I knew I wanted to get out of the small town. I didn't know what that meant. I didn't know what I was going to do. I know I wanted to do something in business. My dad was very, very handy. I am not handy like that. I can watch a YouTube video, figure out, I've done tons of renovations, but like I'm just not naturally handy like that, right? I'd rather use my mind and kind of problem solve that way. So growing up, I was like, all right, what can I do in business that will allow me to essentially make as much money as I want or as hard as I can work for it. And I don't remember exactly what the trigger point was for real estate, but I looked at real estate and I was like, okay, regardless of what my interests are, whether it's accounting, finance, I'm going to throw human resources. No one's interested in that. But any aspect of business, you can find that in real estate, sales, management, leadership, investments, all these different things, construction, project management. So I really started leaning towards that. And when I was a freshman at ECU, I was doing electrical work with my cousin, which is very labor intensive, during the winter. And about a month into it, I was like, I'm done. I can't do this. So I went to the co-op office at ECU. They had an opportunity with a small property management company, and they were looking for a lease consultant. So it was awesome. I mean, I was 18, 19, 20 years old, and I was the face of all these student housing communities. So when people would come in looking for an apartment, they would talk to me. So then when we'd go out on the weekends, I'd see all the same people. So it was a really good avenue for me to meet a lot of different people. And kind of stuck with that through college, and then that just kind of progressed. But growing up in a small town, it is difficult to get outside of that mindset. Nothing wrong with growing up and staying in a small town, right? I grew up with a lot of people that are very successful at what they do, whether it's farming, whether it's building dump trucks, any kind of industry that they're excited about. They did very well. I had a couple of kids from high school that went on to be doctors and attorneys and stuff like that. But it's such a small sample set. When you're talking about 90 or 100 people, it feels like a lot, but it's not, right? Another quick story, my freshman year, same roommate, Virginia Beach, Yankee, he kept asking, he's like, what do you keep saying you're drinking? I was like, it's water. He's like, it's not. So I learned so much, and you don't know what you don't know. So that was a great experience for me, but to have the motivation and the mindset to kind of get out of that small town, I knew from an early age that I wanted out as quickly as possible, and I knew I didn't want to go back. Yeah.
That's the struggle I had is like, I knew I wanted to be in business for myself, but I didn't know what that looked like because there weren't a lot of people to look up to. Like there were people that owned businesses, like a landscape company or, some sort of construction company, but they weren't like the ever building entrepreneurs that are like learning lessons along the way. They found their niche, they stuck with it. That's great. But like
they created a job for themselves.
That's what they did. And it's like, I didn't want to do that, but I didn't know how to get outside of that. And, traveling and doing all the different things. And then like you said, learning how to talk outside of your little bubble. I'm from the north. I'm from just north of Pittsburgh. So we talk pretty funny up there. There's Pittsburghese. And now, like, I didn't think it was funny then. And then now I go back and I'm like, this is how I used to talk. But I didn't know until I got out around other people. Were you a good student?
Yeah. I mean, school came easy to me. I thought school came easy to me. So what I mean by that, in high school, they just feed you all the information, right? You get study guides, you get all these preparatory materials to make sure you do well on the test. And I was a good student. I took all the AP classes, calculus, all those different things. Whatever the highest level in high school was, I was trying to take those. Not because I was trying to, get a head start in college. I was bored and wanted to be challenged a little bit. But I quickly learned my freshman year in college that I had no idea how to study. No idea. I was expecting there to be study guides, practice tests and stuff. And it's like, no, read chapters 1 through 5, and there will be a quiz next Tuesday. And I'm like, on what? Anything in chapters 1 through 5. And I don't know what this means, right? So that was a huge learning curve for me because, there's a certain level of arrogance that you go into it, right? And it was very humbling for me to realize that, okay, I'm not going to be able to coast through this. And not that East Carolina is like the most difficult school in the world, but just, being away from your family, living on your own at 18, making choices for yourself, which is a disaster in itself. I actually think kids should work for 2 years post high school before they can go to college, because the first 2 years are just wasting it most of the time, unless they're like, I'm going to be a doctor, attorney, or whatever the case is, and they got a very clear path, which most people do not. But no, good student, turned it around at ECU, graduated with like a 4.0, 3.9, or whatever it was. Did really well at Georgetown in grad school. But no, it was certainly a transition for me, a learning curve to actually learn how to study and learn how to learn.
Yeah.
Yeah.
So I didn't go a traditional college path. I did a trade school and then went back to school later. But I'm learning from doing these interviews that there's two types of people, it seems like, that go to college. The ones that focus on the academics and get the most out of the academics, and then there's the ones that focus on the networking and get more out of the networking and build lifelong relationships. What side were you on?
A little bit of both. Similar to most schools, and I think ECU is unique in fact, because I got a group of friends that it's like the annual ECU reunion. They come in their purple and gold. It's what they live for. I've not been back to Greenville in probably 15 years. Because I don't need to go to Greenville. Like I'll still think I'm 18 and bad things happen. Right. So no, I mean, I built lifelong friendships there. I learned how to come out of my shell a little bit. Right. You're in these environments that you don't know anyone. And this was all not pre, but like cell phones were just starting to come out. Internet was still dial-up, I think. So you didn't have the same kind of social component from an online standpoint. I do remember when Facebook came out my freshman or sophomore year or something like that. But it forces you into these situations, these social environments where you need to learn how to have a conversation with someone instead of doing this or sending a text or whatever the case is. So there was that component of it, and then there was the academic component of it. It wasn't until probably my junior year that I was like, all right, I'm starting to see some of the value in this. Anything calculus related is the biggest waste of time I've ever seen in my life. I have no idea how to even use calculus in real world unless you're a mathematician or maybe an engineer. But with AI, like all that stuff's going away anyway. It's more of like the business classes, the entrepreneurial classes, the accounting. Accounting, get it. Understood, need it, value in that. But most of the stuff is just, I don't know, to me, it was just trying to teach you how to pass a test or an exam. And it was difficult for me to understand, how do I take this information and actually relate it in a real world scenario. So, kids coming out of college, they have all the knowledge, but they may not understand how to necessarily apply that knowledge, which is, again, why I think people should work for 2 years, manual labor, doing something post high school before going to college so they can appreciate the information and the learning environment that they're then exposed to.
What'd you do after ECU?
Moved to Raleigh, started working in property management. Thought that's what I wanted to do. And it was for a while. So this was 2004, 5 maybe. And for a solid almost 15 years, it kept me in that industry. I tried to escape a couple of times, but property management is one of those things that it keeps pulling you back in. But again, met a ton of great people, worked with some really smart individuals, lived up in New York City for, I don't know, 45, 60 days, felt like it was a year, right outside of Manhattan and White Plains. And then lived in Miami for a little while as well, same company. And just being exposed to different environments, different demographics, different expectations and standards was really helpful for me. Again, coming from that small town environment, I wanted to get that exposure. I wanted to at least try something different. Even though Raleigh's a much larger city than Dunn, North Carolina, I was like, I still want to be like part of the big city, at least try it out. And tons of learning experiences from that, but I have gained 3 or 4 key partnerships from the time I spent in that industry that still do deals with me today. So all worth it. Learned a ton, but property management again is one of those things that like it's hard to escape from it.
Were you doing commercial, residential?
All multifamily.
Okay.
Yeah, multifamily. So, 30, 40, $50 million properties. And any point I was over, I think the most was probably like 30 with 250 employees. I don't even know how many residents live there. Way too many. They all have issues. And it is multifamily. The difficult part's not the community. It's not the financials. It's the people.
Yeah.
It's a lot of personalities that you have to deal with. But no, great experience. It was a little bit of an unconventional path. But I love real estate so much. And that was the easiest, most secure way for me to get in because, back in 03, 04, it was like the end of the dot-com bust and, trying to be a real estate broker, which wasn't even on my radar at that point. I'm assuming it would have been very difficult. I remember the first house I bought, we have due diligence fees here. And as people were relocating here during COVID, that was a whole different conversation with what those fees went up to. But I remember, the house was $138,000. That was a lot of money, right? You're 23 years old. And the due diligence fee was $100. And I was so scared. I was like, what if the inspection comes back with something, I'm going to lose my $100? But that was the mindset, right? But no, just, over the 15 years that I spent in, I guess, kind of corporate property management, institutional property management, was very valuable. And without that, I would have never been able to have the background and knowledge and experience to start our own company.
What were you doing in the property management? Were you in the sales side or did you?
Pretty much every position outside of maintenance I held. So started as a lease consultant. So you go into an apartment community, you're looking for a 1, 2, 3 bedroom. It's the lease consultants that come to you. They show you around, semi-tour guides, semi-salespeople, right? Try to find the right apartment for them. And then was promoted to an assistant property manager. So, 22 years old, chest starts to poke out a little bit, you get a little bit of authority, right? I'm just responsible for making sure people pay their rent on time, implementing rules and regulations from the lease. And then got promoted to property manager, and then regional property manager, and then director. And then I wanted to transition to the asset management side of it. So the way institutional property management, institutional multifamily works is you've got, a JP Morgan or, institutional capital that's behind the project. And then you have your on-site team, so Greystar is the largest one in the country, huge presence here. There's a couple others, but, so Greystar is Greystar is a management company, and then you've got, call it JP Morgan as the owner, then you've got asset management that's kind of a layer between those two. So it's almost like an owner's rep, but from the asset management side, it's geared more towards on like, how do I increase the value of this asset? Not how do I, get a $5 bump in rent? That's part of the equation, but just from a larger perspective, how do I increase the value of this? And you do it through cap rates and NOI and expense management, all these things. And when you're playing with numbers at that scale, it gets really fun. It's all percentage based, right? But 2% of a $50 million deal is a lot more fun than 2% of a $100,000 deal. Right. So being able to see the impact that these decisions we're making for our clients and our investors, I love that. And then I started dabbling a little bit more in the development side of it. I wanted to get exposure to as much of that side of the industry. I felt like asset management, development, financial, more data driven, more analytical, on-site management, more rinse and repeat, nose down, hard work, all these different things. And I wanted to be on the other side. I wanted to be the one kind of directing and influencing how that property is performing from a financial standpoint. And then again, and property or asset management was a huge component of being able to allow me to transition into kind of what I'm doing today and have been doing for the last 11 years. So we started a company 11 years ago.
So what finally got you to leave the industry and go back to school, or did you go back to school while you were
Back to school while in the industry.
Okay.
Yep. That was a catalyst for me. I was like, all right, how can I? And at that point, I was still corporate minded, right? So I was like, do I get an MBA? I got accepted to NC State for the MBA program, got accepted to ECU for the MBA program, but I was like, I don't feel like it needs to be an MBA. It needs to be focused 100% on real estate because that's what I love. That's my passion. I'm not leaving this industry. So Georgetown had a program and still has a program where it focuses on, a couple of core competencies within real estate, whether it's finance, whether it's development, construction management, private equity. So there's a couple of different avenues for that. And great program, learned a ton, made some really good connections there as well. Because these are people that are usually starting in their 30s, right? They're going back to school, they're getting a master's degree or graduate degree. They've got anywhere from 8 to 10 years work experience. So they're bringing something to the table, some life experience. And that was important for me as well. And it was very diverse. So it was people from all over the country with different backgrounds, but all real estate backgrounds. And I did that while working in corporate, again, to try to use that as an avenue and a vehicle to exit out of it. Didn't know what I wanted to do with it, but knew I wanted to exit out. But no, I remember it was 2019, October 2019. I've been working since I was 14 years old, just in general, right? So in North Carolina, at least at that time, you get a worker's permit at 14, you start working, you get paid by the hour. I worked in a grocery store all throughout high school. And I remember $4.25 was the minimum wage when I first started working. And, so I always received a paycheck, 2015, my wife and I started our real estate company, Property Specific, out of, a need. We had a couple of neighbors. We lived in Heritage, a couple of neighbors. They were trying to sell their house. They weren't able to. Knew we had a background in property management. They're like, hey, can you guys rent this out for us? And I'm like, yeah, I'm sure we can. It's like, but I think we need like a firm. We need a license. My wife and I both had real estate license at the time, but we didn't have the infrastructure for any of that. So we just started winging it. I got a little LLC, got a firm license for it. And then we just started managing properties mainly throughout Wake Forest, all kind of referral based. And, that built and built and built. In 2018, I purchased a small multifamily property down by Campbell University, 16 townhomes. That was a big opportunity for me. And fun fact, the guy I partnered with was the CEO of the company I worked for in New York. So just coming full circle, using his mentorship, not only to get me to that point, but he was also some of the equity behind it. So again, the property management side provided tons of invaluable relationships and network opportunities for me that I still use today. Bought that, and then we felt like we had enough money coming in from the real estate stuff. And what we did is we just took the money that we made. We do a couple of brokerage deals. We didn't really know what we were doing. But the management fees, that was consistent, right? So we were getting the money from that. And up until 2019, we were just taking that money and buying real estate. We were not touching our W-2 income. It made life a lot easier when you had a W-2 from an approval standpoint, but didn't necessarily have to use the W-2 income. It was just the money from the real estate company. So we bought several rental properties, bought this small multifamily down by Campbell. And in 2019, I said to my wife, and she had left her corporate job a year prior. So she was director of marketing for some of the large multifamily companies. We were both in the industry, just different focal points. She left in 2018 to do consulting work for developers and marketing efforts and stuff all up and down the East Coast because she had developed all these relationships with, whether it's with partners or, LMC, which is a derivative of Lennar. LMC is Lennar's multifamily division. So she was director of marketing for those different companies. So she was able to leverage the relationships and basically just do consulting work for a year because she came to the realization a year earlier than I did, right? We couldn't both leave our jobs at the same time, but October 2019, I said to her, I was like, give me 6 months. Let me figure out what I want to do when I grow up. We got enough cash coming in from the real estate stuff. We'll just pause buying investment properties and we'll use the money to actually pay our bills and stuff like that. And because I told her, I was like, if I see one more email from HR or accounting, I'm going to lose it. If I get one more email, and it didn't matter what the email was. It was just that mindset of I'm done being like an employee, right? So left the corporate world. First time since 14, not received a paycheck. Went all into, I went all in. Leased an office space, below, I think, where you guys were, over where Sweetie's Candy Shop used to be. I had a little office in Hatch before that. Bob hooked me up with an office there. And then signed a 18-month lease on that. And that was a big deal, right? Big deal. We renovated everything, and then COVID hit. 6 months later, I was like, oh boy. I was like, all right, well, this is how people go out of business. Let me find a resume. Let me put the tail between the legs, go back to the corporate world, get a job somewhere. And fortunately, not fortunately for COVID, but fortunately for the real estate industry, it took off.
Boomed.
It was out of control. I've never seen anything like it. We were just responding to things that were happening. There was nothing proactive about it. It started with, people relocating. We created this private Facebook group that was called Moving to Raleigh. That fueled a lot of our business because everyone was moving to Raleigh, and it was the golden time in real estate. I don't know if we'll ever see that in our lifetimes again, and I'm not sure we should see that in our lifetimes again because the money was free and people just didn't care what they were paying. Going back to that due diligence fee, 2003, super nervous to write a check for $100. I have clients stroking a check for $100,000 to $125,000 for a due diligence fee on a property they've never seen before. Yep. That's the only way we can get the deal done. So I didn't get the 6 months to figure out what I wanted to do when I grew up. Because and when I said I went all in, we did the lease and the brick and mortar. I bought probably $1 million worth of real estate to renovate and flip. One in downtown Wake Forest, one in Fuquay, one in North Hills. We had just finished a pretty large renovation in North Hills while I was still working a W-2 job. So I felt like I had a really good plan in place, and I would just figure it out. And then COVID hit. I was like, all right, I don't have it figured out, right? But so the passion projects, if you will, kind of had to take a back seat because it was just this influx. Our first broker was Andrea Cummins. We've known her probably since 2016, 17, something like that. So almost 10 years. And she lived in our neighborhood. Fantastic. She started helping us on the property management side, just doing leasing and managing a couple of properties. And she was actually our first, not employee because they're independent contractors, but our first team member, if you will. So she's been with us from the beginning. There's a picture of my wife, Andrea, and myself in that big North Hills flip that we did back in 2018. That was the Property Specific team, 2020 came, March came, dust settled a little bit. Everyone started getting the real estate license. So you go back to some of the negative experiences you've had with real estate agents, and it's for a couple of reasons. One, a lot of people got their license right before COVID or right after COVID. They didn't learn how to be a broker. They learned how to react. They learned how to open a door and show houses. They learned how to navigate what the real estate market looked like at that point, which was how high of a due diligence fee can you write? How much over list price can you go? Will you sign this gap appraisal waiver saying that you understand this house is not going to appraise for what you're buying it for and you're going to cover the difference? So they understood how to navigate those challenges, but what they didn't understand was how to truly sell a property. If you were lucky enough to get a listing during COVID, your week was this: pictures on a Monday, there's a little light staging Tuesday, Wednesday, put it as a coming soon on Thursday, show and start Saturday morning, open house, offers due Sunday between 3 and 5. And set an hour or two aside after that, go through your spreadsheet, review it with the sellers. There was no skill to sell a house All you had to do was put it on the MLS. So what happened is these new agents got this false sense of success. Now, monetarily, they were very successful, but they weren't learning how to be real estate agents. They were not learning how to build a book of business, how to network, how to build out their sphere and their team. They were just reacting. I mean, forever and a day, everyone's always been told, if you get into real estate, expect 6 months without a paycheck, at least 6 months, which up until COVID was correct. We had brokers getting paid in 30 days. Like they would join us, we would give them a lead, or they had a family member or whatever, and in 30 days they were getting their first paycheck, and it didn't stop. I mean, we had brokers well over six figures with little to no experience. I mean, a couple $100,000, which is a lot of money in general, specifically for a brand new agent. So that became their reality and their expectation. So fast forward to today, a normal market, what feels odd and goofy and weird and can't explain it, it's a normal market from a supply and demand standpoint. There's nuances to it, of course, but so many people just compare it to like 20 through 23 or 24. That wasn't normal. This is normal. And people don't know what to do. They don't know where to find leads. They don't know how to network with individuals like yourself that need a creative approach to get a house sold, because listing agents now have to sell houses, not just put it on the MLS. I mean, your experience with Andrea and Allison, we talked about it. They got creative. They did some like staging. They did some videos. They were very intentional on their plan, and they're fantastic. They have this influx of business coming in because of their networking and the success stories like yours. So we're extremely lucky to have Andrea and Allison. They work together as a team. They complement each other very well. But they do the basics. The basic thing. It's networking, it's communicating, it's sending out direct mailers. You've got this other side of the real estate industry that is hyper influence focused. So it's like, I sent a reel to our team. I was like, if I ever see any of you guys do this, we're done. But it's this environment and this culture of look at me, look at me, look at me. I'm dancing in a video in your empty house. Come see me, come by my house. That does not work. Like that's not going to get anyone to come to your open house. But that's what people are defaulting to because they don't understand how to truly sell real estate because of when they got their license and kind of the environment that was created. People are struggling to figure out what to do right now if they didn't actually build a foundation when they first got their license.
How did you, because you've lived in multiple cities. I'm assuming you lived in Georgetown area for a period of time and then end up back in Raleigh. How'd you settle on the Raleigh market to be your home?
That was easy. It was a forced decision. So my wife is from Boston. So she grew up in the Northeast. So it was 2009. We got engaged. We had just finished building our house in Heritage. It was a big deal for us. It was our starter home, and it was like low 300s, and that felt like $1 million at the time, right? So like we were putting down our roots, and this opportunity to get into asset management came about in New York, and I'm like, oh, I got to take this opportunity. I have to, right? I got to get outside of this like on-site management, this like just grinding every day, stressed out all the time. Like I got to get on the other side of it. And this was my opportunity to get on the other side of it. So I don't think I'm good at sales, but I was good at convincing her that it was a good move. She knew it wasn't a good move. She's like, you're going to hate it. I can already tell you're going to hate it. But like, you feel like this is something you need to do. I'm supporting you. Let's go. Right. So we just finished building our house. We rented out for 3 years. Move up to beautiful White Plains, New York. We rent an apartment along the train tracks. That train starts at 5 a.m. And we had our dog with us, and he's a disaster anyway. We're on like the 7th floor, so nothing's easy. And like reality just kind of started to set in. Like this is a very different lifestyle. So we lasted there maybe 30 or 45 days. And the CEO was gracious enough to let And at that point, she didn't work for the same company. Was gracious enough to let me move back to Raleigh and work remote. And I'm like, we could have done this from the start, like, because we couldn't go back to our house. We signed a 3-year lease on it, right? So now we bought another place to kind of start over again with that. And fast forward a couple of years, the corporate office decided it's moving from New York down to Miami. And at this point, my wife also worked for the same company as a director of marketing. And they're like, okay, Chris and Lori, for real this time, you have to come down to Miami. Like we're putting the team back together, right? The band's going back together. So we moved down to Miami, and we were there for maybe 60 days. And due to just some like disagreements with some of the leadership had changed. It wasn't the same company and I'd been with it for 3 or 4 years. It just, the company was changing, leadership roles were different and stuff like that. So we made the decision that we were going to both leave that firm, that company, and move back to Raleigh. And my wife has been very clear on several occasions that if we leave again, I'm leaving by myself. So it was a forced decision, Raleigh. She loves, and when I say Raleigh, Wake Forest, so we live in Wake Forest, but no, it's such a great place to live. You don't realize what you have until you leave, right? You have your 4 seasons here. Traffic feels like it's bad. It's not. People are generally nice. Sometimes they have to be here for 3 or 4 years and get acclimated, but generally people are nice that are here. It's a huge melting pot. You've got 3 great universities, great industry, proximity to the beach, proximity to the mountains. So it's a fantastic place to live. But it took me living in New York and Miami, which are 2 very different places, to realize how awesome it was here.
Yeah.
Yeah.
When you were talking about, my buying experience or selling experience with y'all, you mentioned a few things, staging, which I haven't seen real staging in a long time.
Right.
It's all virtual staging nowadays. And then the team, I like the team because with other realtors I've worked with, it's like you sign with a realtor and then you get calls from random people that you've never met or talked to, and you don't know who, or if you're like, hey, you forgot to take the open house sign down, like, oh, well, I told so-and-so to do that. They must have forgot. Where's the accountability in that? Like, we didn't have that. It was the first time working with a team like that, and it was always one of them. One might have been on vacation that week, and the other one's communicating with us, and vice versa, and they did real well with that. And then the biggest thing for me was like, when I met with them at the house, I said, here's my concerns, here's my issues. They said, well, here's our plan, here's how we're going to do it. I said, if you do everything you say, I'm going to be happy. That's all. I just need you to do what you say you're going to do and communicate along the way. And they crushed it.
Yeah. And that's the thing. It's having a plan, right? And executing the plan and being consistent with it. So you had mentioned, different teams and most team environments. And I say Andrea and Allison are a team. They're a team because they work together and they do everything together. It's not like you have a team leader, which a lot of these organizations are set up that way. So you've got, rainmaker, team leader, and then you have 5 or 6 other people that are actually doing the grunt work, right? So it's either showing you, there's a transaction coordinator that's sending you. So there's a lot of different people that get involved in that, but you never actually work with the person that you were attracted to, from a transactional standpoint. They've got a great presence. They seem like they do a lot of business in this area. Maybe they come to the listing appointment from a sales perspective, but as soon as you sign that paperwork, and this isn't everyone, but it's more common than not. Once you sign that listing agreement, you kind of get passed off to someone else. And that's who you end up working with until it gets to a certain point. And then you work with someone else. So with us, and specifically Allison and Andrew, they are the 2 points of contact, and they do really well as a team because they bring something different to the table. Andrea is high energy, and then Allison is like grounding to her. Like she's the one that'll make sure stuff gets done and organized and stuff like that. And then Andrea has the big ideas, and the 2 of them together make a really good team. historically, when my wife was more involved in the company, she always did deals with someone else. So she either didn't want to or realized she could not do a deal by herself because she is very type A personality, highly unorganized, but can influence you for whatever she needs you to do. So she's that kind of person, right? Which is chaotic, and there's probably always music playing in her head and all these different things. So she would always partner with one of our brokers, usually one of our newer brokers, and say, hey, I've got this client. They're all good to go, signed everything. Do you want to split it, 60-40, 50-50, whatever it is? I'll go do the first showing with you, and then you're going to kind of take over from there. So it allowed our newer brokers to get some quick transactional volume, get some experience. And I mean, that continued for probably 2 or 3 years. I mean, we got up to 32 brokers at one point, which is just a big number for a small independent firm. Yeah, I mean, it was a lot. There's a lot of different personalities to manage, a lot of different situations that pop up at any given point, because everyone always has an issue they have to deal with. But with Andrea and Allison and your experience, that I hear that time and time and time again. It's 2 is usually better than 1, especially when they complement each other and they each bring something different to the table.
Yeah. Yeah, it was a great experience. And just the like I said, the light staging made the house. It was a completely different feel walking through it after they did it. And then some of the ideas that saved me money while we were doing repairs and stuff. I had done most of the repairs prior to that, but there was a few loose ends that needed cleaned up. And one example was going from our master bathroom into the walk-in closet. There was 2 half doors, and one of them was broken. I had trouble finding a match, and she's like, "Oh, we should just take it off. Most people leave them open anyway."
Right.
And I was like, "Well, now that you mentioned it, we left them open all the time."
Yeah.
She's like, "So we'll remove them, clean it up, and perfect." We did that. It worked, and saved me some money. Saved me from having to replace both doors. Yeah, it was good.
Good.
Yeah, the struggle with that house.
Yeah.
So one thing is to get started, I've always bought unique properties because they're easier to work deals on. They're easier to do owner financing on, different things that I've done to, get my feet underneath me along the way. But the problem with buying unique properties is when it's time to sell them, you're trying to sell a unique property. And if you haven't done the right things to it to help get rid of it, and that's always been a challenge. So I know you've bought quite a bit of real estate. How do you know what's a good buy and what's not if you're not planning on keeping it long term?
So I have 2 different strategies. First strategy is buying it to renovate and sell it. Maybe I rent it out for 3 or 4 years if it's just not the right time to sell it or whatever the case is, but it's not going to be a long-term buy and hold for me. I look for floor plans that make sense. I look for houses that need work, because you get the sweat equity, you force the appreciation that way, but they've got to have a good floor plan that makes sense, right? There's one I'm looking at with an investor now. It doesn't make sense because it's a 4-bedroom with 2 baths. And I'm like, it doesn't live like it's supposed to, and the square footage doesn't quite work on it. Some things it makes sense to change. Enough money you can change anything, but there's always that balance. So I look for the ones that something easy, right? So you have a downstairs bedroom that could also be an office, but a downstairs guest bedroom. And then in that same kind of hallway, you have a bathroom. So what we do is we put a sliding barn door over the entrance into the hallway. That way, have a private access to your own bathroom for guests that are staying in that room. So looking at ways to how do you increase the livability of it? How do you make it more desirable? Can you add square footage somewhere, right? Is there unfinished basement or attic space or something like that? How can you force some appreciation there? Sometimes it's just something as simple as cosmetic. When I say cosmetic, it could be a kitchen renovation, new cabinets, countertops, flooring, appliances, just kind of, lipstick on stuff. But I like the ones that need some kind of component. Now, I've also bought them and taken them down to the studs. completely down to the studs. 8-foot ceilings, we ended up with 12-foot ceilings. So, we lifted the rafters up, engineered it properly to where it just had a completely different look and feel. Those are fun as well. More risk involved in that, more money involved in it. But so you've got the approach of kind of, what does a flip opportunity look like? Flips to me are jobs. It's hard to scale that. It's hard to really build a business side of that. And there's a couple of companies that I think have been successful building a business, more so wholesale versus flipping. And then there's the buy and hold. I'm a huge fan of the buy and hold. That's what's going to actually build wealth. Because what's going to happen is you flip a house, you make 75 grand. What are you going to do? You're going to go buy a boat. You're going to go buy another flip house. You're going to spend that money somewhere, and you're going to pay taxes on it. So with a buy and hold, there's different strategies to be able to do cash out refis once you have enough equity in it, take that money and continue to build your portfolio. So it's not just about one house. No one's getting wealthy off one house unless it's given to you and it's on the coast somewhere, and whatever the case is. People build true wealth through portfolios, and that could be strictly residential. I really like commercial right now, and we can go into that a little bit later. But with residential, the house is worth what your neighbor sold it for. You can improve it, you can add some square footage, all those different things. But if you're renting that property out, what it rents for has zero impact of the value of that property. You can rent it for $2,000 or $5,000, doesn't matter. Only thing that matters is what your neighbor sold their house for from a residential standpoint. Commercial, they're in cap rates, they're in NOI. You control the value of that commercial asset. Now, the surrounding area will dictate what the cap rate is, and that's kind of the basis for how everything's valued in commercial real estate, multifamily included. But if I can increase the NOI by increasing rents or smart expense management, what it does to the value of a property is out of control. Like it's fun. Yeah. It's really fun. Whereas again, residential, you can, do some cosmetic stuff. Maybe you rent it out for $100 more a month, right? $1,200 a year in your pocket. It's not changing anything. Right. The house is worth a little bit more, but not really, right? It's more just the surrounding area, interest rates, job security, all the external factors that dictate what property values are worth today. It's not what you specifically do to the house. It's what everyone else is doing that impacts the value of your house.
Was it last year or the year before there was a big change on how the realtor percentages get paid and divvied out? Yep. What impact has that had, and can you kind of explain what that was?
Yeah. So not much of an impact in North Carolina. So what happened is somewhere in the Midwest, everything was like a handshake deal. Everyone in the Midwest is super nice, super, trusted, nice, so I get it, but there were no agency agreements in place whenever someone was submitting an offer on a property. So if I'm a buyer, you're an agent in Ohio, for example, and I say, hey, I want to see this house, write an offer on it. You say, great, you submit the offer. I've not agreed to any kind of agency agreement with you. I don't know how the commissions work. Maybe we've talked about it, maybe we haven't, but there's nothing in writing. And it was always commonplace for the seller to cover the commissions for the buyer's agent and the listing agent, right? Same way here, it's always been the case. But in the absence of an agency agreement, you're not able to negotiate that. In North Carolina, it's always been in our buyer agency agreements that you have to have an agency agreement before you can submit an offer on behalf of a client. There has to be an agency between the two parties, or the firm and the client. And it will clearly state the expectations for what the buyer's agent is expecting to receive. So what that looks like is if I'm your buyer's agent and I say, hey, Randy, I'm going to help you find something, I'm going to say my fee, and we avoid using the word standard, but my fee that I want to get, let's say it's 2.5%, right? So that's me representing you. I'm showing you all these houses. Hopefully I only show you 2. Realistically, I'm showing you 40, every weekend, so there's work that goes into it. But the buyer agency agreement will say, first, I'm going to try to get it from the seller. I'm going to see if we can negotiate the seller covering my fee so you're not paying anything out of pocket. And that's always been it's always how it's been. With the lawsuit, gosh, this was August of 2024, I believe it was. Yeah, I think August 2024. They changed it to where no longer can the commission be listed in MLS, because that was like the agreement, the unwritten rule with everyone. So anyone that was a member of the MLS, you could put what you were offering as a buyer's agent fee, and that was gold. That's all you needed to see. If it was MLS, it's 2.4, 2.5, 2.6, whatever it is, I can look in the MLS and say, okay, Randy, you really like that house. I already know they're going to cover my fee, so you can go in rest assured that you're not paying 2.5% or $10,000 to $15,000, $20,000 to me at closing. No one wants to do that, right? Especially when that's not been the process up until that point. So they changed the rules. They created a new form. Either fortunately or unfortunately, the market normalized, so it was no longer a strong seller's market. But I will tell you, if this rule change happened in 2022, it would have been a very different story, because sellers had crazy upper hand. Seller could say, no, I'm not offering any compensation to your buyer's agent. If you want a buyer's agent, you pay him yourself. I've got 15 offers on my plate right now. Whichever one looks the best as a net to me, and that may be me including the buyer's agent if it's high enough over list price, or if it's at list price, me not paying the buyer's agent. So until we get back to a market that is heavy seller controlled, and that's not the market today, I don't see anything changing. I've not personally seen anything changing. Again, a couple of different forms, the jargon we use, the process is a little bit different, but the majority of the time, at the end of the day, the seller or the listing firm is still offering to cover the buyer's agent fee. So now in other states where, like Florida, for example, I think it was more common for that to really be negotiated. We never negotiated that because it was in MLS. Like, I already knew. Yeah. If they tried to change it, all I had to do was print out the sheet from the MLS. It's like, nope, you disclose that it's 2.4 or whatever the amount is. That's what I'm entitled to. And it was like binding, legally binding, if it was in the MLS. Yeah. So it's, at first everyone was like, this, all these different things. But even with the newest update, they're going to change some stuff to where it becomes easier to maneuver through the commission part of it. But it's less transparent today, I will say, which leaves it open for more negotiation between all parties.
All right. Something else that you mentioned earlier was that you view this as a normal housing market. I'd like to dive into that a little bit because, my experience is on the production side. Mm. That's my industry that I work in. Yeah. And you're working on the resale side, and they correlate. Mm-hmm. Like when the builders slow down, the resales go up, and vice versa. Right now, the builders have slowed down to a crawl for the whole first quarter of this year.
They're paying buyers to buy the house.
Yeah. And then something else you might be able to speak to is like, the way I understand it, a lot of the reason it is this way is because the investors aren't buying. Mm-hmm. A lot of the investors got scared when the president was talking about limiting how many they could buy. So a lot of the investors have pulled back, and that's who's buying a lot of the time.
The institutional investors have pulled back.
Right.
So if you're institutional, and I'd have to read to see, what that trigger point is. If you, own more than X percent or X number of rentals nationwide, you're then classified institutional. For like a lower level investor, it doesn't impact them, right? But no, that is a concern. BlackRock would go in and buy half of a production neighborhood, cookie cutter neighborhoods. They go in and buy them, and then they'd rent them all out, because cost of capital was so low, and those are all cash deals anyway, but cost of capital was so low. So when the interest rates are super low, there's a correlation here. If you can go and get a 2.75% interest rate on a 30-year fixed, you're saving zero money in the bank because there's no incentive. So it's how they control inflation, right? Or the money in the economy. So when there's too much money in the economy, they start incentivizing people to save money. So right now, you could probably get 4 or 5% on a 12-month CD at Wells Fargo because they're trying to take money out of the economy because of inflation. There's too much money in it. It's driving pricing up. Same thing with mortgage rates. The lower the mortgage rate, the less incentive there is to actually save money. So it created this perfect storm where someone has $100,000 in the bank making 0.01%. They're like, oh, I can now invest in real estate at 2.25%, 2.75%, 3%, and I'm going to make so much more money because there's zero incentive for me to save my money right now. Today, there's incentive to save money. Interest rates high, savings rates high. So it's interesting the correlation on that, but I have seen the traditional non-cash investor pause right now because they can't make the numbers work. It's 6.5%, 7%. The delta or discrepancy between the home values and what they're going to rent for, it's too far apart because over the last 4 years, investors bought up a lot of stuff. And when they can't get the units refilled because of oversupply of rentals, dropping the rental price. So now if you're looking to buy something as a rental, it's gotta be in the right location. It's gotta be a really good floor plan. You have to have the right team in place to be able to rent it, to even get to, if you're a cash buyer, to even get to probably a 4.5% cash on cash return. Compare that to 3 or 4 years ago, it was 7 and 8% cash on cash return. Yeah. So the rules have changed, or how the game is played has changed. But that investor that needs to get a mortgage, they're sitting on the sidelines right now because they can't make their numbers work. And even if it's a good opportunity from an appreciation standpoint, as a normal human being to say, I'm going to take $100,000 out of this account, buy this property, and lose $200 a month. That's a hard pill to swallow. Yeah. Because most people want to see the 200 coming in, much less give up the 200. It's savvy investors that are structuring deals that way because they understand, once they can refi or, what the appreciation is going to do for the impact of the value of that house. So they've got a little bit more of a macro approach to it. But we're seeing fewer and fewer traditional investors. I've got a handful of cash investors that it's Christmas time for them right now. They can close in 2 weeks. They can get a decent deal, and they can be very picky. The challenge is the cream of the crop's not on the market right now. And what I mean by that is people that are selling today, and I don't know your situation, so I don't want to group you into this, but generally speaking, people that are selling today, it's either because it's a divorce, a relocation, or a downsizing. Or someone's inherited a property from a family member, something like that. So it's kind of people that are forced to sell, not that they want to sell. No one wants to sell out of their 2.5% 30-year fixed to go into a house at 6.5%.
Right.
They're not doing it right now. So like the best homes are not on the market right now because those sellers have no incentive to sell. And they also understand that when the rates, and I don't know when that's going to happen. I mean, we've been talking about this for 3 years, but you ask them, it's like, oh, next month they're coming down. They're not. So like, they've been saying that for 3 years. 36 times they failed on that prediction. But when the rates finally come down, everyone knows that's when their house will go back up in value. So everyone's kind of waiting for that right now, if they're even in the market to look for something.
All right. What do you think about that one idea they're throwing around? I think they do it in Canada, but carrying your rate to your next purchase. Did you hear about that one?
I haven't heard about that.
So if you have, if you bought your house at the right time, you have 2.5%. Now you get to carry that to your next buy.
I mean, it makes sense because from a bank standpoint, right? If you're at 2.5%, you don't love that 2.5% interest rate. But if they sell and they don't use you again, you lose all of it. So might as well try to hold on to that 2.5% as long as you possibly can. Kind of like VA loans, you can kind of, transfer benefits and stuff like that. But that's interesting. Even if it added 1%, like, make a little money off of it. Like, all right, you get 1 basis point or 100 basis points over whatever your current rate is, you can transfer that to the next. If I'm at a 2.5 and I can go buy at a 3.5, I'm going to do that. That's not a big enough difference for me to stay in a situation if I don't love the house. And so many people bought houses they hate today during COVID because it was a game. They just wanted to win the game.
Right.
They didn't even care about the house. It was just like the game. Everyone was like moving here, fighting over stuff. I mean, it got to the point where I had to have the courageous conversations with a buyer coming from out of state. First, they're coming from a state where there's no due diligence fee. So immediately they think the entire thing's a scam because the due diligence fees are non-refundable if you terminate the contract. It gets paid directly to the seller, at the time of contract. It goes towards your closing, if you make it to the closing table, but they immediately thought it was a scam. So then to convince them or explain to them, okay, due diligence is a real thing. It's part of the negotiation, whatever. And here's what that number needs to be. It got to the point where if you can't strike the check for at least $50,000 and be comfortable walking away from that, if this house is falling down, you're wasting your time. And those were the conversations that we ended up having with people.
Yeah. I know one of the games I hate the most when selling the real estate is the inspection process.
Yeah.
And you can find anybody to inspect your house nowadays. And you can see, especially working in the industry, it's like I can see people that are just trying to fill up pages so it looks like they're doing their job. Yeah. But then, buyers taking that and putting fake numbers on it, using AI to price it all out and coming up with these crazy numbers to try and renegotiate everything at that point. That part of the process drives me nuts.
Yeah.
How many deals fall apart because of that?
Enough. Yeah. We just had one fall out yesterday. It wasn't one of mine, but one of our brokers. There was some inspection stuff that sellers were willing to take care of, and buyers are so discerning right now that the smallest thing will push them away. And it didn't work out. Compare that to one that I had in Durham. It's great lot. It was almost 2 acres, established neighborhood ranch, needed work. Don't get me wrong, dated, needed work. Had some crawl space issues going on, and some different things. And I don't know, I probably had 60 showings on that thing, and finally got one offer, right? And we got pretty close on the list price. We were off by 20 grand. We were listed at and it's closed, so I can disclose it now. It was listed at 420, went under contract at 397.5. And I was like, and I told the seller, I was like, all right, buckle up. When they do their inspections, buckle up. Sure enough, they came back with, I want to say it was a $50,000 or $60,000 discount or concessions in lieu of repairs. But something we always have to remember. Buyers want to buy, sellers want to sell. So if they've put in an offer on that house, they want the house. Now, I don't blame them for asking for $50,000, but guess what? We counted at 13 and they accepted and it closed last week. So just because someone asked for a high number, and it wasn't even any more back and forth, it was like, all right, we'll do 13. And like, okay, fine. So it wasn't like the back and forth. But no, I mean, we are starting to see more deals fall out of contract because those due diligence fees are lower now. So there's less monetary risk for a buyer to walk away. Maybe their due diligence fee is $25,000, $3,000. Another between appraisal and inspections, maybe you're another $1,000. So you're anywhere from $35,000 to $4,000, which isn't a small amount of money, but like if it needs $75,000 worth of work, it's easier to walk away from 4 than commit to 75 if you're not getting reimbursed for that.
Right.
So we are seeing more contracts fall out during that due diligence period.
Yeah, that stuff drives me crazy. I think our inspection came back at like the 14,000, and they said they'd take half, and 7,000, and yeah, I made Andrea work for that one. I was like, I'm not going over 2,500.
Yeah,
and
yeah.
it took some back and forth. It was like, and that's the situations get weird. I think between realtors is because it's the realtors communicating, and you don't know what the actual clients are saying, and they're both trying to work to get the best deal. And I hate to think that a realtor, won't give because they're trying to impress their clients, and they're gonna ruin the deal because of that.
Yeah. So I will tell you that we created a form that's more commonplace now, but at the time it felt revolutionary. We created a commission rebate letter, and almost every transaction it was used on. So an example would be, and this was during COVID. Actually, I sent one over last week, if I'm being honest, but I agreed to cover a $700 home warranty. But at least our firm and our brokers, they understand the importance of closing, right? But they also understand that they're generally being compensated pretty well. Not saying they're not deserving of it, they're not putting the work in, but these are high ticket sales. Anywhere from 10 to 30, 40, $50,000 commission checks, right? So if the buyer and seller are off by $1,500 and the deal is going to fall apart, guess what? The agent says, commission rebate, I will give up $1,500 of my commission to make this deal work, because otherwise I get nothing. So that was an approach we started taking. Now it's a last resort. We don't want to do it immediately. It's like, all right, if this deal is really going to fall apart, me as an agent, I'm going to give up some money to make it work, because I'd rather get $1,500 less of a $20,000 check than zero, and then have to go back and start over again. So we see a little bit more of that, but no, it's it's an environment where sellers feel like they're giving their house away, buyers feel like they're paying over, and those two different mindsets come to head during the due diligence period, because that seller is like, I'm doing nothing. I already gave you a $30,000 discount. And I'm like, well, you know what? That's what your house was worth, because that's what someone was willing to pay for it. Like, it's not like we had other offers at full list and you just decided to offer it to this one. That's what the market's telling you someone's willing to pay, right? So I get it. You don't want to fix everything. We want to set the expectations that, hey, you're getting a pretty good deal on this house, but the buyer is coming up 15 or 18,000 over their max budget to get to this discounted number that the sellers feel like they're giving it away. So the two different perspectives going in it, a buyer saying, I'm overpaying $15,000. I want you to fix everything. A seller said, I just discounted this 30,000. I'm fixing nothing. Those are the fun ones.
Yeah. And it's like, for us in this instance, it was like, we were already given cash back at closing. They were fishing for more cash. If you wanted more cash, ask for more at closing. Don't play the game. I don't like the game.
Like if cash is important to you, and a lot of people it is, right? Closing costs are high today. Then structure that in the deal. And I don't know what your 6 something probably was what your list price was.
Yeah.
Let's say it was
$649.
Okay, so list price $650. I don't know what it actually went under contract for, but if they're like, hey, we want $15,000 towards closing, okay, well maybe that offer looks like $660 and $15,000 for closing. So that's a net $645 to you.
Right.
So all that matters to you is what your net number is. What matters to the buyer is, how can they get as much cash in their pocket to offset having to come out of pocket for these? They'd rather mortgage their closing cost than come out of pocket for it. So there's different ways to structure it. Now it needs to approve or appraise for $15,000 over list price. But that's a strategy that we use. If we find out what's important to the buyer, what's important to the seller, how can we structure this deal where it's a win-win, where people feel like they're getting what they want out of the deal.
I hope you're enjoying the podcast so far. We appreciate everybody for watching. We appreciate the growth that we're seeing. We're getting amazing guests. We still need to get a little bit more reach to keep this momentum going. So help us out. Drop a comment, like, follow, subscribe, share if you love the content. Help us continuing to get amazing guests with amazing stories and help those stories get around the world like they should be. Thank you, and I hope you enjoy the rest of the episode. With buying weird properties like I have generally done in the past and still do, apparently, even though I keep saying I'm going to get away from it. So that's something that I've always used to try and sell the properties is cash at closing. Because whether it's something needs fixed or like, you know, the house we live in, the floors squeak, built in 1944, you know, and so I've always found that you attract more buyers if they're able to kind of bump up into that next level and get cash back. But I've always got, not saying on this deal I did, but I've always got pushback on that from the realtors. Like, how do you feel about advertising it that way or just accepting it that way?
Yeah, I mean, I think that, you know, let's say carpet. Everyone agrees that the carpet needs to be replaced. So it's not uncommon for the listing agent to say, hey, buyer is offering a $10,000 credit for carpet. That way, buyer looks at it, carpet looks horrible. They already know they're getting money at closing, so it no longer becomes an objection for them, right? Just like builders do. Builders say, hey, you know, we're going to give you $20,000 to use as you please. 99% of the time is to buy down the rate. You know, they're getting them in the high threes right now. So it's not uncommon to see sellers or builders to use the concessions. Usually the list price has taken those concessions into consideration, right? So it's all like just how everything is perceived. But at the end of the day, if the buyer is comfortable with whatever their mortgage payment is, because that's all they care about. Like, I mean, this is America. People care what they spend on a monthly basis. Yeah, it doesn't matter. They actually don't care about the interest rate. They don't care about anything. It's just, what's my mortgage payment? What am I committing to and for how long? And if you can structure and maneuver it to where they're comfortable with that number, all the rest of it's just semantics.
So like in my situation, it was, we put the house on the market and then took it off because of the time of the year we were going into and wanted to wait and didn't want to have too many consecutive days on the MLS. Like, what's a good amount of time? Like, if you're doing that, if you're able to do that, how long should you wait before you relist it? And second, what time is the best time of the year to list your house?
So a couple of things. Let's say you have it listed, you know, when's the right time for a price adjustment? Yeah, because that's usually the first logical thing versus taking it off the market. If you've been on the market for 2 weeks and one showing, it's a pricing issue. I'm very firm in this statement. If it's not selling, it's due to price or presentation. It's the only two reasons. Yeah. Now, there are several factors that play into that, right? Why does it not present well? Is it an awkward floor plan? Does it not have furniture? Are there purple walls? Are the carpets destroyed? So that's part of the presentation. Also, the presentation could be, how is it presented online? Do the pictures look really good? You know, sometimes digital enhancements work. Sometimes they kind of backfire as well. So, you know, what does that message look like online? And that's really what the listing agent is driving. You know, they can't do anything about the floor plan. They can do something about staging, how it shows, and paint colors and stuff like that. But the presentation is really important, and the price has to match the presentation. If a house shows really well and is move-in ready, it will sell for more. If a wall needs to be painted, a buyer will look at that and be like, we should just tear the whole house down instead of paint this one wall. Like, that's the mentality that a lot of them have. So the more that the seller or the listing agents put a thoughtful plan and approach in place, the quicker it's going to sell and for a higher price point. The challenge is most brokers don't want to take that initiative and not every seller is willing to spend $1,000 for landscaping or repaint a room or whatever the case is. But this isn't 2022 anymore. Like, you don't just put it on the MLS and people just buy it because it's a house and they want to say they won in a competitive market. It's got to show well. It's got to be priced right. And there's a lot of homes, albeit not cream of the crop, but there's a lot of homes for people to be looking at right now. So yours has got to stand out in some way.
Yeah, we lucked out with ours because previously ours, it's in downtown Wake Forest, so a lot of historic homes. And previously, when we were selling it, it always timed where another house similar to it would come on the market at the same time. Yeah. And maybe it would be on a better street or like just something would be different. Yeah. That one would go and ours wouldn't. Yeah. This time when we listed it, it was the only one in town that was like ours. So there wasn't a lot to choose from. As soon as it closed, 3 signs went up. Yeah, right around the corner from us. So timing was everything on that one. And the problem with our house was the floor plan. And it was great for us. I have 5 kids. There were 7 of us living in the house. So having 3 stories with multiple common areas and small rooms spread out through the house, it was amazing for us. But most people don't need that. Right. When we were looking for a house, we were touring all these houses, and the first thing you walk into was a big foyer. Yeah. And then you'd have a dining room, and then like another dining room or 2 living rooms, and it's like we don't need all that. Right. We need bedrooms. Yeah. And finding a historic home where that had actually been updated. Yeah. They used to do a lot of small bedrooms, and that's what worked for us. Yeah. But most people weren't looking for that. That was our biggest challenge of selling the house. Yeah. But before we even listed it, initially we repainted the whole inside of the house, had the outside touched up, fixed a bunch of stuff that just sticks out to you. Didn't fix everything, but the majority of it. What if somebody's trying to sell the house? Like, what's the most important things to spend your money on to try and maximize the value?
HVACs are important because that's a big ticket item. Water heaters, although they're not super expensive, it's water, right? So if there's signs that a water heater is leaking, and God forbid it's in the attic, like, address that because that's just an accident waiting to happen. You hear people talking about kitchens and bathrooms. Like, if you're doing a renovation project, that's important. But if we're talking about just where to focus your attention on either deferred maintenance or, things that just aren't working properly, I would say HVAC, roofs are a big deal, and they really need to be about 22 to 23 years old, I think, before it starts coming in that conversation. Paint colors, because someone just needs to be able to see themselves living there. And that's the market and the expectation today. Landscaping, first impression. It's all the simple things, but some of the bigger ticket items, I would say HVAC. If the HVAC units are old, and especially if you have 2 of them, let's say they're 12 to 15 years old, that's $20,000 right there. So people take that into consideration when they're looking to do an offer. But it's also hard to be like, well, I'm not going to replace something that's working. It's worked, however many years, but it's just the mentality and the thought process that buyers have. But no, I think, clean, neutral, and a good flow, and to the extent possible, move-in ready, because buyers' perspective, they're like, okay, I'm getting a mortgage. It's 6.25%, 6.5%, whatever it is. That stings. And I have to start painting bedrooms, and I have to do this and I have to do that. A lot of times that's enough to put them over the edge because they're already bitter that it's a 6.5% mortgage rate. They're bitter they missed out on 2022 at 3.25% or 3% or whatever the case is.
What do you think about the real estate market overall and buying real estate? Like you said earlier, a lot of people are waiting for something to change, either housing prices to come down, interest rates to come down, but they really want to get a house. our house is going to drop that much either in price or interest rate that it's worth waiting to buy your next house, or should people just do it?
I think that so let's talk about the correlation between home values and interest rates, right? People wait for interest rates to come down, but guess what happens to the home values? They go up. So it's a lose-lose battle here, right? You may get a lower interest rate, but that house is going to go up in value because the buyer has more buying power now. So if they can now afford a $400,000 house because the interest rate is at 4.5 versus 6.5, then the same house that was maybe 350 is now going to be 400. It's still attracting the same buyer demographic, but that buyer has more buying power, same house. I would make the argument if you found the house today that you loved, right? Checks all the boxes. Who cares about the 6.5% interest rate? Because if the rates come down, guess what you can do? Refi. And guess what's going to happen to the value of the house? It's going to go up. So it's this win-win scenario. So if you can comfortably afford the down payment, the 6.5, 6.25, whatever the mortgage payment is, and it's the right house, now is the time. It's not the time to make concessions on what you're looking for, to get into something. Like, you find the right house, whether that's move-in ready, whether it has the opportunity, to kind of be what you want it to be. Focus on that, know what the interest rates are, understand that as they come down to a certain point, they need to get to a certain level before it makes sense to do a refi, and then it's the best of both worlds. You put more money in your pocket, your house is worth more money. A lot of people are waiting for the rates to come down. And when they do, if they do, there's going to be a lot of competition. So due diligence fees are going to go back up. Home values are going to start going back up. It's the same thing that happened when interest rates were at 2.5. Prices out of control. People felt good because they had a 2.5% mortgage rate, but they were also going $100,000 over list price to get that. So to me, it's find the right house. If you have the means to afford it, now is the time.
Yeah. I've always said that I wish there was an equation or like some sort of analysis of historical data of the correlation between the housing prices and the interest rates with the economy at the time, whether it's inflation, like taking all those into account to see if there's a sweet spot for buying properties. Because I'm sure there is. If you add enough data into that, you're going to it's going to spit out a number that tells you yes or no, it's the best time to buy.
If you can time it perfectly. And it also depends on what the alternative is as well, right? So let's say you're renting a house and you're like, I'm going to wait for the rates to come down, right? I'm comfortable renting. I'm going to be here for the next however many years. I'm buying within 2 miles from where I'm renting, so I'm not going anywhere, right? Those are the easiest ones for me to convince because they're so hyper-focused on call it a 6.5% interest rate. They feel that's really high, right? What's the interest rate when you rent a property? 100%. You're paying 100% interest when you rent a property. So 0 of your rent payment is going towards equity. You're building no equity. It's an interest-only loan, essentially. I'd much rather pay 6.5% interest and actually start building equity. So for those people that continue to rent while waiting for the rates to come down, those are the biggest mistakes I see right now. Now, if people are renting because of uncertainty, like I don't know if I'm going to be here in a year, I don't know if AI is going to replace me, whatever the situation is, got it. Continue to rent. Don't be foolish to go buy something and like you're unemployed 6 months after that. But anyone that has this ability and they're just simply renting because they feel the rates are too high, they need to know they're paying 100% interest every single month.
Yeah.
It's the most you can pay. Like, makes no sense.
Since you brought it up, are you integrating AI at all into what you all are doing? And like, do you see any big effects coming down the line for real estate and AI?
I am behind the 8 ball on AI. So full transparency, I I fought it for a long time. Not that I don't like change, but it's to the point I don't believe anything I see online anymore. Like nothing. Like I'm not sure if you're sitting here right now.
Right.
It's like to that point. But I also recognize the value that AI has in people's businesses, right? I think it needs to be used strategically, not from a lazy standpoint, because I'll receive something and I know exactly it came from ChatGPT. I know the person it came from, and they don't have the capacity or the ability to formulate sentences like that. So I already know it came from ChatGPT, and it's structured in a very certain way. To me, that's the lazy way, right? But if you are using AI to help build out automated systems, automated follow-up, things that can make you more efficient at what you do, not using AI to write your marketing plan for your new listing. Because guess who also looks at AI? Sellers and buyers. They see the same stuff. So to me, AI is a tool to make you more efficient. And a lot of people, I think, are nervous that AI is going to take their job. It's not. The person that understands AI is going to take your job. That's the difference.
100%.
Yes. So I need to get more familiar and comfortable with AI. I use it as a toy right now. Graphics and stuff like that. And there's no shortage of AI, summits and webinars, all these things. I mean, there's an entire industry forming around, coaching from an AI standpoint and integrating that in. But I do think AI from a real estate standpoint has and will continue to play a big role. Now, do I think that we're going to see AI replacing agents? I don't think so. I think there's a place for it. I think if you're a savvy investor and you know what you're doing and you just need someone to structure the deal for you between an attorney and AI, I think they can get that done. But for the majority of people, they still want Andrea and Allison taking them around to show them houses, give them that insight, that human connection of the neighborhood. They have someone they can talk to, because most people are not super savvy when they're buying or selling a house. They know what they know, but they're just not experienced enough to be able to do it, in my opinion, on their own. I do think it ends up costing them more money if they try to do it themselves, unless they have some kind of background, whether they sold and bought a lot of properties. Excuse me, maybe they're an agent in another state, whatever the case is. But for the majority of people, I do think it will continue to have a human component to it. But AI across the board is changing a lot of things, a lot.
What do you think about the online brokers? So, I can go pay a broker online $250 to list my house on the MLS, or I can pay 5% to a real estate agency.
Yep. I think it depends on the seller, because they're around here. They have their flat fees, and they're like, here's what we'll do. We'll get photos and we'll put it on the MLS, but then we're directing everyone to you, right? So the seller needs to be savvy enough to understand, the process, how to negotiate with those people, how to maneuver through just the entire process. So it's like, all right, house just went on the market, listed at 900. We got an offer of 875 on the first day, but there's 6 showings scheduled for the next 2 days. You know what? As an agent, I'm going to say, let's pause. Let's let those 6 or 7 other people. We already know we have an offer. I'm now going to use that offer as leverage against the other 6 or 7 to force them into a decision quickly, and they will go above list price if they like the house, knowing that there's another offer in place. Whereas if it's someone that has an emotional tie to it, they're like, I just want it done. I want it done so I can move on with my life. They're going to leave some money on the table in that scenario. But I do see a place for that, but I think the sellers need to be savvy. And I'll give a quick example. We had a list. So we live in Stonewater. We had a listing in Stonewater, and was pretty adamant of what the price needed to be. It needed to be at $899. It started at $1 million, too high, right? We got down to 925, and one of the people that came in ended up buying it at $899. Seller is a commercial real estate broker. And I know him personally. I mean, he's helped structure some commercial deals for me. Good guy, right? He was like, we're going to make a change. We're going to go with this flat fee listing because I can negotiate all my stuff. And the new list price was $899, and it went under contract because of the person that saw while we had it listed. So price and presentation are the two main things. Now, he kept more of his profits because he did that flat fee. Now, he did still have to pay a buyer's agent fee, but on the listing side, he paid $500,000. I don't know what it was, but it was cheaper for him to do that, but he also had the experience and background to be able to negotiate that stuff on his own, whereas the majority of people don't. They may think they do, but then you also have the nuances of how to handle the inspections, how to handle everything else that goes along with it. So I don't see any fundamental changes happening. There's some platforms, and my wife and I are actually invested in one of them. It's a transparent platform where it's not an auction, but it's completely transparent. It's really big in the Northeast, not so much here because people are old school here and don't like change. But it allows a seller to list the house. Someone says, "Hey, here's my price," and it's all transparent. So list price is $1 million. Someone comes in at $950. Someone else is interested. They can see that person offer $950. Guess what? I'll offer $960, $965. Keeps happening. Next thing you know, you're above $1 million because everyone can see what everyone else is offering. That's one of the biggest challenges in our market and most of the markets. It's like, we can't disclose any details of an offer without that buyer's authorization. And no buyer is going to authorize me as a listing agent to disclose the terms of their offer, because if they're at $950 and they say, yeah, you can disclose it, I'll be like, all right, cool, just go to $952 and win,
Yeah.
So there's this unknown as a buyer in a multiple offer situation. You're like, I don't know what they offer. Well, I don't know either, right? And in most cases, the seller is the winner there, because no one knows what they're bidding against, and they go as high as they can out the gate because they don't want to lose it.
Yeah. How do you find the right realtors for your team to come in and fit into the culture? And
Yep.
is that a struggle?
I wouldn't say it's a struggle. It is. We're very intentional on who we want to be a part of our team, right? So we're not franchise, we're independent. So it's our name and our brand that we work very hard every day to maintain and improve. So all of our brokers, and I'll use Andrew and Allison as an example, they are a reflection of our company. They're ambassadors of our company. They're very hardworking. People love working with them. Those are the kind of agents we're looking for. We're looking for the ones that are wanting to be part of a small boutique firm. And we intentionally named the company Property Specific for two reasons. One, thought it was a cool name. Well, my wife thought it was a cool name that, we approach every property in a specific manner, right? It's not a one size fits all. It's like, hey, we're going to have a specific plan for your property, right? And the other part was we didn't want to put our name in it. We wanted other agents to be able to build their book of business under an umbrella, a company name that was not Webb Realty or Webb Partner, whatever it is. So that was really important to me. And I think that's allowed us to, attract some really good agents because they want to brand themselves, and we encourage them, kind of within guidelines and stuff like that. But they're their own entity under Property Specific Realty versus, and there's tons of independent and non-independent brokerages that put their name in their company. They put their name in the name of the company. to me, it can be more challenging to grow at scale. Not that we're trying to grow at some crazy scale, but again, it was important for us to create a platform where people could be successful in that platform without it being tied to a specific person's name. Because I didn't want my wife and I to always be the face of the firm for the first 9 years we worked. So like when people thought Property Specific, they thought Chris and Lori. Lori, very high producing agent. Like most people around here know who she is. She had some health challenges that diverted her attention and passion into a different area. So she's opened up a handful of health and wellness spas in Rollsville and Wake Forest that focuses on cold plunge, red light therapy, salt booths, like all these kind of different modalities and practitioners and yoga and Pilates and stuff like that. And that's her passion right now. And if it were our names on it, she wouldn't have been able to do that, you know? So we're fortunate that we've got Andrea and Allison, we've got Emily, which is a high producing agent. So we've got different faces of the firm now, which was the end goal, to allow it to grow organically by the people that we have working with us, not just Chris and Lori.
Need to tell your wife that this was a good experience and see if we can get her on here.
Oh,
I like talking about all that stuff.
Yeah,
too.
no, she, you need to have her on here. You know, entrepreneur to the core. They just opened up their third location. I mean, they're going balls to the wall on this thing. Yeah, I mean, it's the first of its kind where it is kind of a one-stop shop. So, flagship location is in Cobblestone. First floor retail, 2,000 square feet. So there's 3 practitioners in there. There's a physical therapist, a nutrition, and an esthetician. And then we've got a yoga studio where they do bar Pilates, reformers, yoga, dance class. I don't even know what all they do. Then we've got infrared saunas. We've got red light therapy. And then we have a contrast room. So in the contrast room, which was my idea, my baby, it is a private room that you book for an hour. You've got your infrared sauna, vitamin C shower, and cold plunge and a TV. So you just rotate through that circuit over a 60-minute period. People love that. It's great for recovery. I do it a lot. I can't believe I'm saying this, but I love doing a cold plunge. I love it. I feel so good afterwards. But no, she, you know, when she got sick, she was like, how can I take this negative, right? This horrible thing and turn it into a positive and help other people out. So that's what she's done. She's created a community, an environment, and a physical place where people that have struggled with chronic, you know, autoimmune dysautonomia, you know, COVID did a number on a lot of people. So kind of an environment and a community for those people, but also just people in general that are focused on their wellness. So they do peptide consults, they have HRT. It's geared more heavily towards women, but I'm like starting to squeeze my way in there to diversify it a little bit, right? Just because there's only so many women you can reach. So it's like, all right, well, let's find a way to get some men in there as well. The contrast room is really popular for that. Even some of the yoga classes, like the guys are in there for that. But that's her passion right now. And if we didn't structure it the way we did, if we didn't have the caliber of people we have on our team now, and have had on our team for a while, she wouldn't have been able to do that. So
yeah, you got to put the right people in place to get that freedom to chase.
Sometimes you have to step out of the way.
Yeah, absolutely. You touched on it briefly, but I know in our first conversation on the phone, you talked about you guys are independent and unaffiliated, I think was the word you used. Yep. So explain what the difference is, if you could.
Yeah. So there's 2 avenues whenever someone's looking to start their own firm or be an agent, right? So the normal path, you get your license, and I'm not downplaying or badmouth, I'm just throwing, you know, more of the popular names out there, right? Myself included. When I first got my license, I went to Keller Williams for 2 reasons. One, it was the cheapest for me to hang my license. I had a full-time corporate job, so this wasn't like my focus. And the only reason why I got my license is because I started buying investment properties and I saw the lack of value the agents were bringing to me. They were literally just opening the door. They understood nothing about investment properties. And I was like, and this was, 12, 13 years ago, average commission was probably like 6 or 7,000. I was like, how are they getting $7,000 to open the door? Like, I feel like I'm not getting my money's worth. And it wasn't my money, but like if I had a license, I could have done that myself. So I got my real estate license so I could buy my own investment properties. Needed somewhere to hang my license as a new agent. Picked Keller Williams because it was $65 a month and no expectations for me to have to go into the office. And they had a really good training program. I didn't take advantage of it, but and they still do have a really good training program. In 2015, we created our company because it was focused more on property management, and Keller Williams did not allow any brokers to do property management under the Keller Williams name at that time. I don't know if they do or not. So we created Property Specific Realty on, firm and everything. And I wanted it to stay independent for a couple of reasons. The flexibility. Now, obviously, we have to follow the same rules as anyone else when it comes to the real estate commission, but like how we do it, we're kind of in control of it. And I feel like our team members, our brokers feel like they help influence how we operate as well, what our growth looks like. So it really is this kind of team environment that we're all in this together. And if we were under EXP or Keller Williams or whatever the case is, we would be a team underneath one of those brokerages. We wouldn't be our own firm. So, again, whether it's Keller Williams, Coldwell Banker, any of those, you're either a solo agent or you're a team underneath them. And for me, I was like, why do I want to give up a portion of the commissions to, one of these national brokerages when I don't feel like we're going to get the value out of it, right? For a solo agent, I get it, right? Unless there's an established boutique local firm, I understand why people go to an EXP or an LPT or Real and EXP or Keller Williams, stuff like that. They're looking for that training component. But I typically see them stay for a couple of years, get trained, get mentored, and then they start to look for something else, whether that's joining a firm like ours, whether it's a solo agent at a different firm, whether it's cloud brokerage or, brick and mortar. And the landscape is changing on a daily basis. I mean, you have Compass buying out companies, Keller Williams buying out company, Zillow debates. I mean, it's a lot of money and ego at play, and I enjoy not being a part of that. So we're local, we're boutique. I think it's a competitive advantage for us, to be honest with you. And there's a guy here that owns a similar size brokerage, a super smart guy. And he said, you know what? How do we, as independent brokerages, how do we best compete with a Compass or a Keller Williams or something like that? Because they can do what's called office exclusives. So office exclusive is off market. That listing can only be shared with brokers inside your firm. So a Compass is nationwide. It's not individual franchise like Keller Williams. So Keller Williams, and Keller Williams offices are big, but if they get an off-market office exclusive, they can share that listing with all the agents in Keller Williams, Luxury Realty, whatever the franchise name is. And that could be anywhere from 50, 60 to 100 agents in there. So there's value in that. Compass, nationwide. So, they go to a listing appointment and they say, hey, we can take your office listing, keep it off market, send it to thousands of agents, get their feedback. Maybe they have a buyer, maybe they don't, whatever, no days on market. You can finish the repairs you want to do, whatever the case is. So he started thinking, he's like, how do smaller guys compete with that? So over the last couple of years, he's been focused on creating what's called the Independent Brokerage Alliance, which allows all of us independent brokerages to join it. And now we can share our office exclusives with every member in that Independent Brokerage Alliance. So instead of me being able to share it with 12 or 14 or 15 agents just inside Property Specific, I can now share it with 100, 200 other agents that are doing a lot of volume. So, it's an exciting kind of venture that we've been on with them for the last 6 months, to be able to expand what that offering looks like to our clients, to now say, hey, Mr. Seller, we can get this in front of 100 agents that are doing, $600 million a year in transactional volume. Sounds a lot better than the 10 agents in our firm.
Yeah.
And that's just been recent, but no, I mean, we've explored the pros and cons of joining, whether it's an EXP or a Real or something like that. But it just financially it didn't make sense, because I can't charge our brokers a higher split just because we do that. And the only way to avoid that is if I absorb the additional cut we have to give to that national brokerage as a part of being a part of their team. And it just didn't make sense. We're coming up on year 11. We got most of it figured out. So, I think we have a good enough reputation and our agents are really successful. If we can bring on a couple new agents a year that fit in our ecosystem, and adds value to us and we can add value to them, then, that's a victory for me.
Awesome. We're approaching that 2-hour mark, so I don't want to hold you here all day. Yeah. Is there anything that we didn't talk about you or property specific that you feel like viewers should know?
No, not property specific. Going back to, and this is gonna be a shameless plug here, but going back to pre-COVID, where I said, give me 6 months to figure out what I want to do when I grow up, that got derailed. About 6 months ago, the entrepreneurial spirit sparked again. So, and we talked about there's a reason we never put our name behind anything. I finally decided to create something and put my name behind it. So I rolled out Webb Partners, which was a big deal for me to put my last name on something. I struggled with it for a couple of months, reached out to a couple of different people, get their opinion, mentors and stuff like that. And they're like, why haven't you done this before? People trust you. You've got all these different relationships. So Webb Partners, and still heavily involved in property specific, but Webb Partners is the passion project I didn't get to do prior to COVID. So I am taking the experience that I have from the development, acquisition, finance, all that stuff, and sourcing cool projects. Some I do just by myself. Some I'm looking to bring in investors. It could be a big renovation project on a mixed use project. It could be development, brand new development. It's not going to be helping buyers and sellers because I don't have a real estate firm for license for the Webb Partners. All that I'll still go through property specific, but came up with the concept probably early December, and proud to say that Webb Partners closed on its first project last week in downtown Franklinton. I love downtown Franklinton. So we bought one of the buildings there where Curtsy's is. So it's 3 first floor retail and there's 10 office spaces above that. So there's a value component to that where we can kind of rearrange some of the office space. And then we've got a small redevelopment opportunity under contract in downtown Wake Forest. We're just working through like site work and make sure all the numbers work and stuff like that. So that's kind of my parallel project with Property Specific, is to finally capitalize in a structured format the people that I've met and have gained their trust over the last 20 years. To actually change the landscape of Wake Forest and Franklinton and other areas. So super excited about that. And some of these projects will also feed Property Specific, right? So if it's a new townhome development or whatever, then guess who is the official listing firm for it? Property Specific. So it all, kind of connects together, but this is like a project that I'm like excited and focused on.
Well, that's cool. Yeah, we're excited about the revitalization of all these small downtowns in our area.
Yeah,
we've been following that and visiting them, and it's pretty awesome.
Yeah. And there's There's some roadblocks in Wake Forest. There's a couple of people that are roadblocks in Wake Forest, but I'm hopeful that we'll actually start to see some things happen. There's always something in the works, but it seems like it struggles to get to the finish line.
Yeah.
So, and there's so many opportunities, and there's no shortage of money in downtown Wake Forest, with the surrounding areas. But no, super excited about what 2026 has in store, not only for Web Partners, but for Property Specific. We had our second best year last year. And why that's important is our first best year was when we had 32 brokers. Our second best year, and we were only off by $3 million. We did it with 12. So that it's a testament to the caliber of people that we now have that are all in and have been with us for a while. We've got one broker that sold the highest price per square foot in Hazentree recently. So just finding people like that want to expand beyond just like the normal stuff. These are also entrepreneurial people at heart, and they're like, how can I do something bigger and better? Not how can I, do my $4 million a year or whatever their goal is. It's like, no, how do you do $15 million a year? So that's something I like working with all of them, is to help change their perception and mindset of what's possible. Because I think there's so many limiting beliefs that people have for themselves. I think a lot of people don't have a clear vision of what they want to do, and in the absence of that, it's chaos. So I work a lot with them to help define, okay, what is it that you want to do? Like, is it relocation? Is it high-end luxury? Like, define and figure out what it is that you want to do, and let's put a plan together to do it, versus just being reactive, because most people are reactive.
Yeah. Awesome. I think we had a couple questions.
Yeah, so we had a couple AI related ones that I think you kind of talked about. It was, are you actively encouraging either employees or clients to use AI? And do you think AI is going to take over jobs?
So I always encourage our team members to learn as much about AI as they possibly can. I think it's irresponsible to ignore the fact that AI is here to stay, and it will be smarter tomorrow and smarter the day after that. From a client perspective, I don't. I still want the clients to look at us as the experts, even if we're getting that information, via AI. But I wouldn't feel comfortable saying to a client, "Oh, why don't you like chat GPT it and tell me what you think?" Doesn't mean they're not doing it, but I don't want to encourage them to do it. And then I think the second part was, do I think AI is going to take jobs? Going back to what I said before, I don't, but the person that understands how to use AI will take your job.
Mm-hmm.
So your last question was, how do you pick who to partner up with?
So for me, whether it is a buyer, seller, or investor, one, I need to get along with them, right? I need to make sure that they feel comfortable with me spending 8 hours on a Saturday going around and looking at houses. I approach it a little bit different. I'm not the cheerleader. I'm not the one that's probably going to get you super psyched when you walk into the house. I'm probably going to be the one to say, all right, let's consider this, right? Because I'm looking at it as that's an investment for them. So I don't play as much on the emotional component of it. I just try to be very factual and honest and transparent on everything. So for buyers and sellers, those are the ones that I typically work with the best. Investors are going to be the ones that either are brand new investors, because I love teaching people about investments. And I also love partnering with the ones that know more than me, because I always want to extract, and I have a couple of those. I always want to extract information from them. They live in different markets. They're on the West Coast. They see things through a different lens than I do. So it's really cool to be able to brainstorm with them and say, what are you seeing in Silicon Valley that is impacting the real estate values in your market? And obviously RTP is not Silicon Valley, but are there any correlations there? So yeah, I mean, those are typically the ones I enjoy working with, but I do really enjoy working with brand new investors because to see them light up when they kind of get the basic fundamental values of how to invest in real estate. And once I can convince someone to transition from residential to commercial, those are really fun conversations. Not everyone can do it because obviously it's a bigger purchase price on it, but no, I love helping people reach their investment goals, whether that's a homeowner, a buyer, or an investor. I enjoy the helping component of it.
Awesome. That was it. Couple, I guess, rapid fire. We covered most of them today, but any influential books or mentors along the way?
So 2 books that I really like, and they're unrelated, but Be Your Future Self Now by Ben Hardy, I believe it is. It goes into the science of self-help is probably not the right word, but the science of like mindset, right? So if you're focused just solely on where you are today, that's where you're going to stay. So you really got to figure out, A, what am I looking for? And what does that person look like that can do the things that I want to do? And then what changes do I need to make to become that person to be able to do those things and execute at that level? So that was a really good book. I'm not someone that enjoys reading books. I can't listen to audio because my mind just starts going in different places. But this was a book that like every page, like so many nuggets. So I really like that. And then the other one, and it's something I struggled with, and I think most people still struggle with, I do as well, is trying to get out of the way, because E-Myth is a great book that kind of talks about the technician and the entrepreneur and the operator and stuff like that. But a book called Who Not How by Dan Sullivan talks about who can you get on your team to do things that free up your time to do more important things. So it's just looking for the who that can help you, not you trying to figure out how to do it. Because I struggle with that. I'm like, I can do it better than someone else. Let me just figure it out, whatever the case is. So over the last probably 6 to 8 months, I've been hyper focused on how do I step out of the way? How do I get people that can do it better or even 80% as well as I can? Because that's good enough. If that frees up my time to focus on the growth of the company and mentoring our brokers and stuff like that. So it gets me kind of out of the day-to-day weeds and like admin stuff. So yeah, those 2 books I think are fantastic.
Awesome. If you were starting over and you had $10,000, what would you invest it in or what would you do with it?
I would, if I knew what I wanted to do, I would hire a coach or a mentor. I'd take $10,000, write a check for speed, find someone that has done it, not reinvent the wheel. I'd pay them all day long to teach me how to do it.
So invest in yourself first.
Invest in yourself, yes.
Awesome. All right. Well, I'll tell everybody where they can find you. Shout out anything you want to shout out.
Yeah. So for the real estate stuff, Property Specific Realty. .com is just our website. All of my contact information is on there. I'm on social. I can't tell you what my social handles are. I have no idea. Chris Webb probably on Facebook, and then I think Chris G Webb on Instagram. But our company website is probably the easiest, best way to get in contact with me.
Awesome. We ended every episode the same way because once I figured out my definition, it changed how I run my life and my businesses. Mm-hmm. So how do you personally define success? Success
for me is fulfillment. success isn't money. Success isn't one area. To me, success is how are you performing in 5 different areas? So you've got your business, your money, you've got your relationships, you've got your mindset, you've got your body, and then you have your faith. So to be able to score an 8 out of 10 on all 5 of those, that's what success looks like to me. So, there are people that are super successful in their business, but can't walk a mile without passing out, and they're just not showing up for themselves, right? And then you have people that may be hyper focused on their fitness and stuff like that, but they can't afford their gym membership because that's all they're focused on, right? More often than not, those that are hyper focused on their business, their marriage is in shambles. And I think without having a faith component, and not necessarily saying religion, but a faith component, it's like if you don't have a purpose and you don't know why you're doing what you're doing, as soon as it gets hard, you quit. So I think it's super important to have the faith that you're going to fulfill whatever the purpose is that you've set forth. And it's not easy. Those are not easy things to accomplish. And that's why most people, in my mind, are not successful. They may be successful in one area or another, but to truly excel in all 5 of those, to me, that's what success looks like.
Awesome. Well, that's a great way to end it. Thank you so much for your time today. I enjoyed it.
Yeah, absolutely.